Welcome to today's more report analysis videos on Wednesday 16th of November with me, Rich Paramarket Analyst at Handtech Markets. Lots going on today. Bit of a consolidation though really in the markets. We've seen this huge dollar run and the run higher in the Treasury yields. It's beginning to stall a little bit. You've seen this dollar rally towards the top of this uptrend channel. Basically that 100.5 level is the highest on the dollar index we've got since 2003, I believe. So it goes a long way back, and that is sort of the key resistance obviously on the dollar index near to medium term, and we need to, that's from November last year, and the fact that the dollar's rallied so hard could start to consolidate a little bit. That consolidation is interesting, that is sort of being seen as Treasury yields begin to sort of settle a little bit on the 2-year. 10 years slightly higher again today, but generally speaking it's sort of pretty much beginning to settle down a bit, so that's leading to a bit of a consolidation in these markets. You've got the euro and sterling both basically settled against the dollar today, although that huge run higher on the dollar yen continues, but it's interesting that we're seeing sort of gold which is beginning to settle down a bit as well. Big rally on oil yesterday. Big turnaround came on the news that OPEC was sort of moving towards sort of trying to sort of push its members into the production cuts and sort of regenerating that sort of talk, and that's going to continue, I think, obviously into the end of this month, which is when the OPEC meeting is held. So that'll be interesting. Question being on the markets, why are the resources companies and why are they all so strong? Let me show you. Massive head and shoulders reversal, or inverted head and shoulders I should call it, base pattern on iron ore, and also copper as well has based out, and these are big moves, big long-term improvements in these metals, and suggest a potential basing out of these big metals bear markets, and could be a return to sort of a more positive outlook on those base metals. So that's an interesting factor impacting on the markets, but certainly the dollar is still key. Volatility on the equity indices is much lower than it was, so that is interesting as well. So equity markets remain supported, but still a bit stalling. You got the S&P 500 up towards resistance, you got the DAX up towards resistance as well. So what about economic indicators today? Well, we've got a lot actually on the agenda. We've got UK unemployment at 9:30, 4.9, and also weekly earnings, average weekly earnings 2.4%. You've got the 4.9 on unemployment, basically in line with the last few months. 2.4% would be an improvement, and certainly that would be interesting for sterling, considering inflation dropped yesterday. And then moving into the US, you've got inflation for PPI. Now this would be interesting. 1.2% on the year on year, up from 0.7. That's interesting. And on the core as well, 1.5 from 1.2. So this would be possibly again storing up inflation for future months, and the possibility of price rises. Then you've got the industrial production data. 0.2% would be an improvement, or a continued improvement on the year-on-year, although the year-on-year would still be negative. Capacity utilisation improving to 75.5. 75.8 is the highest it's been this year. So that would be generally a sort of a mild tick higher, so that would be beginning to show more of an improvement. And also then you've got the weekly crude oil stocks. Now this could create volatility again. 1.8 million barrels of build on the crude oil. Last couple of weeks have been a build, having had lots of weeks, several weeks of crude oil inventory drawdown, but at the moment it seems as though the supplies are building up again, so that would be negative for the price if that were to be beaten. So lots going on today, and lots to watch out for this afternoon. But my chart today is sterling Aussie. Now we've had a basing out of sterling Aussie. Generally sterling has been improving, has been performing much better, and this big downtrend has been broken on sterling Aussie in the last sort of couple of weeks really. A little bit of a base pattern, you could argue, on the move above 63.80, which generally I suppose you could argue 60 4-figure. We've had this little bit of a pullback yesterday. Is that now a pullback into support? Well, it's interesting because the resistance found on the rally basically at the old low of 67.15. So it's in a bit of a sort of a near-term sort of questioning period whether you can continue the rally and move. I think it's around about 400 odd ticks, 380. Yeah, I mean that's definitely 500 odd ticks, 600 ticks. So that the prospect of a recovery could still be on here for the Aussie, sterling Aussie, but it needs to break back above that old resistance of 67.50. Now the last couple of days of negative candles sort of puts more of a sort of a mixed outlook on this recovery, really, as the RSI has again sort of turned lower from this sort of mid 60s. Zoom out, you see that a little bit better, but it is holding up above 50. The MACD lines are still rising. Stochastics are sort of questioning whether they're going to continue to rally, but I think this is an important sort of time now for the sterling Aussie. 67.15 is clearly a key level of resistance. 64 big figure seems to be coming in now as support, so between these two levels, and depending on the breakout either way, I think it will be interesting to see the direction, because you have broken that downtrend, but the outlook has been stalled slightly in the last couple of days. Now the hourly chart certainly shows 64 figure as your near-term support. You've also broken the sequence of lower highs, so it is beginning to sort of improve again and move above 66.40 of a little rally high would sort of start to generate more upside, but 67.50 is clearly the resistance near term. So mixed outlook on sterling Aussie, but I wish you good luck in your trading today, and I'll speak to you later. Thank you.